Welcome to the Transparent FX Academy. My name is Nick and I'm a top podder on TradingView. And as a top podder, today I'm going to show you exactly how you can become a profitable trader by exploiting multi-time frame technical analysis and order flow. Now let's not waste any more time. Let's go straight in the charts to find some good trading opportunities. Okay, so today I want to make a full breakdown of the situation that currently we're having on nzdusd because it's a pair that at the moment has a lot of potential for a trading opportunity. So obviously I want to make a full breakdown showing you exactly what kind of situation we currently have. Now, as usual, the way in which I will be performing the analysis is first from a technical perspective. We will then go and see what we have from an order flow perspective to see what hedge funds are currently doing in the market from an NZD perspective by using the commitment of traders. So what the speculators in the market are doing, the big institutions that are in the market to actually profit. And obviously by being able to follow their orders, we're able to gain an advantage over our competition in the market. And then by the end of the video, by using these two different types of analysis, we will be able to understand which is the best probabilities and best trading opportunity to be currently looking for on nzdusd. Now, before we get started with the video, for some of you that maybe were interested in joining the mentorship program and you were just waiting for the special for obviously the month of in November, which comes with the Black Friday, we currently have started the special. So you can click the link that you find in description and you can go and check out the special that we are currently having for the mentorship program. It's a big discount, so I really suggest that you go and check it out. And I hope that you appreciate, because I wasn't sure if we were going to make it this month, but then we said, okay, let's make it with limited spots available. So we will either stop and restore the original pricing if all the spots are filled, or we will just continue to make the special to the end of the month and we will then just remove it and this will never happen again. So if you want to get involved, I suggest that you go and check it out. So let's get straight in the video. Okay, so starting from the monthly time frame, what do we have? Now, from a monthly perspective, we have a market that has just provided an impulse, a correction, and a lower low. Now, after a market creates an impulse, correction, lower low, and equal high, what do you expect? Now, in general, from here, you actually expect the market to create a move to the downside for the creation of this inverted head and shoulders. Is a pattern that you see repeated in the market over and over again. You have an impulse, a correction, lower low, and equal high. From here, you expect a wave to the downside before the continuation to the upside for the creation of an inverted head and shoulders. So already from here, what we can expect is a deeper retracement before the continuation to the upside. Now, if we look at the market from a horizontal structure perspective, we can see that at the moment we are at a quite strong supply area. In fact, from here the market had started all this move to the downside. Again, here the market tested and rejected this very strong supply to the downside quite aggressively, and currently the market is testing again this very strong supply, from which we can expect the wave to the downside that we would like to see before the continuation to the upside for the creation of this inverted head and shoulders. So from a monthly perspective, we do expect a nice wave to the downside to be created. Going down on the weekly, what do we see? Now, on the weekly, we can see that currently the market is testing a strong weekly resistance area. Why is this zone strong weekly resistance? Because as we can clearly see here, it was acting as strong resistance. The market broke it to the upside. At that point, previous resistance is turned support. And then the market broke back below. And at that point, after creating this M formation, we do expect a completion at the neckline, which is the previous support, which is now turned resistance. So from a weekly perspective, we do expect continuation to the downside for the creation of this impulse, correction, and impulse pattern to the downside, and rejection of the weekly resistance. Now, in general, After an impulse, if we want to measure the correction, what we have to do is take our Fibonacci from the high to the low of the impulse. And we can see that the market this week that we are currently trading in just went for a test of the 0.786 of the Fibonacci taken on the weekly impulse before getting rejected to the downside. And after this, we can expect a deeper retracement to the downside, actually new impulse to the downside. So rejection of the weekly resistance in combination with the 0.786 and 0.618 Fibonacci's taken on the impulse, which are the confluence of resistance that we are currently encountering at this area. Going down on the daily, what do we see? Now, from a daily perspective, situation is extremely clear. The market lately has been moving in a very, very predictable way. We spoke about nzdusd a lot of times. We spoke about nzdusd when the market was here, and I made a full breakdown explaining all the reasons for which from here we wanted to see the market create this move to the downside and make a lower low. And that is exactly what the market did. Then I spoke about nzdusd again when the market was here, and I made a full video explaining all the reasons for which first we wanted to see a retracement and then a continuation to the downside for the creation of a lower low. And again, that is exactly what the market did. Then we spoke about nzdusd after the market had created this overextended W formation, and I made a full breakdown of nzdusd when the market was here, explaining all the reasons for which we wanted to see a completion of this W formation at the neckline. And again, that is exactly what the market did. Then we had the creation of this W formation, and again, I made a full breakdown explaining all the reasons for which from here we wanted to see the market create a nice move to the downside and form this M formation. And that is again exactly what the market did. Then we had this M formation, and I made a full breakdown explaining all the reasons for which we wanted to see the market create a move to the upside before starting the continuation to the downside. And again, that is exactly what the market did. But in creating the continuation to the downside, the market had created this M formation. So after that, instead of continuing to the downside as we had already expected in our market breakdown, the market started the move to the upside, completing the M formation and creating this channel. And since then, the market has been moving inside of this daily channel. And we spoke about it a few times even lately. After the market had created this W formation, I made a full breakdown explaining all the reasons for which from here we wanted to see the market complete the pattern to the downside. And then with the very last analysis when the market was here, I explained all the reasons for which from here we wanted to see the market create this move to the upside. And that is exactly what the market did. And I will link all this previous analysis. You find it all linked in the description. You can go and check it out for further reference and a lot of more free education. You find everything linked below. Just a quick reminder, make sure you comment below and you let me know which pair you would like me to cover for a trading opportunity in next video. But at the moment, what is the situation and how we can be looking to capitalize on the next moves? Now, at the moment, what we do know is that the market, as we have already identified, is moving inside of this channel. And until the market will remain in this channel, we can expect a lot of sideways movement. But that is a problem. Why is this a problem? Because lately, today, what we have seen is massive volatility. With the same candle, so with today's candle, the market has tested both the top and the bottom of the channel. And this is obviously due to the elections that we are currently having in the US. We're seeing a lot of USD volatility. Now, overall, what we should see is strong USD, okay? The overall outcome of the elections should be a strong USD, but obviously the market trading is reactive. Trading is not predictive. We can predict the best scenarios, but in the end, it's about reacting to what the market is currently showing us. We know that overall, we should see a strong US dollar. We will see, okay? We will see and we will react accordingly. Now, at the moment, how we will be approaching this kind of situation for a trading opportunity with students. Now, before I show you that, let's first go and give a quick check at what we have from a COT perspective. So commitment of traders, which is what hedge funds are currently doing in the market. Now, from an NZD perspective, we can see that with the last report, hedge funds have opened 2.1k long positions and at the same time also 1.7k shorts. So we are seeing some hedging from an institutional perspective on this pair. We see that if we look at the long exposure, we have seen an increase in the long exposure. We went all the way down to from a 47.4% to to 54.5%, and also the short exposure lately has been increasing from 33.7 to 37.2. Net positions clearly increasing from 3.3 to 6.9k, and currently we're sitting with 22k longs and 15k shorts. Now, have hedge funds used all this liquidity and all these stop losses that for sure got wiped out to actually add some proper shorts? That is something that we will see on Friday when we will have the new report, which is definitely something that I am looking forward to see. So we still don't know if hedge funds are using this volatility and all this liquidity that the market is creating to actually add some proper shorts. Definitely a possibility. But the way in which we will be approaching this, as usual, is being reactive and not predictive. We know that we have the bottom of this channel at this level. And this is exactly the support that we will be waiting for the market to break before we are to be looking for any opportunity at the moment with students on nzdusd. So if the market will manage to break below this channel, all the support will be turned resistance, and all timeframes will be in confluence, monthly, weekly, and daily. We will also have a new report to be working with. And if we will see hedge funds adding more shorts, that will definitely be good confluence. So after the break on the retest of the structure, what we will be doing with students. Now, as usual, monthly, weekly, and daily combined with the COT data are the best time frames when it comes to the directional aspect of the market. But the best time frame when it comes to confirmations and entries is the 4 hours. So after the break on the retest of this structure, inside of this area, we will be monitoring price action with students from a 4-hour perspective. And as soon as the market will provide to us one of our valid entries, we will be taking a nice short with a very good risk reward and very good probabilities for the move to the downside and completion of this impulse, correction and impulse pattern to the downside, and rejection of the monthly supply that we have identified at the beginning of the video. If you enjoyed the video, make sure you smash that like button and comment below. It really does support the creation of more free analysis and education on all my platforms. Also, make sure you go and check out the mentorship program. You'll find the link in the description. It's a very complete program. You first learn all the rules of my rule-based strategies, and then you trade them live with me. Each and every day you get a new daily market breakdown showing you exactly how to apply the strategies with entries, stops, and take profits, as well as having me answering all your questions personally every single day. So I really suggest that you go and check it out. The link is in the description, and I will see you in the next video.